Good morning. Well, it looks like the stock market is opening up to the green again. I can get used to this. It was a good day yesterday where we had good gains on the Nasdaq, the S&P, the Dow. It was a good day. Yesterday it was good to break that losing streak. It was good to get back into the green and begin to see stocks do really well. So, we'll take a look at the market just briefly and then we'll jump into some stocks. Today, I wanted to take a look at Apple a little further, kind of do some deep analysis on Apple. I noticed that Ali Financial really went down, and I've been an investor in Ali. I'm not in Ali right now, but I thought I'd take a look at Ali. And then in a stock that came up in a live stream session a couple of days ago, the symbol is GCT. I wanted to go deep into GCT, start from scratch and do a complete review of that stock, put it into my intrinsic value calculator and see what that stock is worth. I know that symbol came up probably 2 or 3 days ago on a live stream. So I wanted to take a deeper dive into it. It looked interesting when we did just a brief kind of review, on the fly. So I wanted to take my time and dig into it. Yesterday, we dug into a couple of stocks, one of them being Disney, and I've created a full video. It's going to release today if you want to see that. And we dug deep into HIMS. So both of those looked interesting. HIMS is really growing, which makes it a very interesting stock. And Disney is really looking a lot better. I think the Disney business a couple of years ago, it was not looking good. But now at least the fundamentals look really good. So good job to the Disney team for improving the company and making it look a lot better. Fundamentals look a lot better. And the stock price has been decreasing. It's not quite where I need it to be, but it's worth watching. And we dug into that one yesterday. So looking at stock prices, it looks like the Dow, S&P, and NASDAQ are in the green. Oil prices are a little down. They were up quite a bit yesterday, but they are at $68 a barrel. That's pretty low for oil. Looks like crypto is trying to get back to the levels it was at. It's got a long ways to go. Bitcoin is at 57. Looks like we got some people joining. Thank you so much. Hawker 1000. And I'm glad that I'm streaming to YouTube and stocks, and I'm glad that you like YouTube. I'm going to continue to do so. I'm going to live stream each morning at this time. I think it's a good time of the day for me to cover stocks. I try to get my game plan in order. I usually don't trade in the first hour of trading. It's just you don't know where the market's going on that particular day. Sometimes it'll give you a head fake where it rises and then it falls, or it falls and then it rises. And in the beginning 1 hour of the trading day, you may have a lot of orders that were thought of yesterday, last night, in the middle of the night that are being executed. And that tends to throw stocks, kind of make them move in one direction or another. And I'd rather just let things kind of settle down and then make my trades. So I'll use this period to kind of get my thoughts on what I want to do and kind of get rolling. All right, so markets are doing good. Asia looks like in Japan, stocks are down just slightly, but the other Asian markets did all right. Our friends in Europe, in Germany, the stocks are a little down. I believe this is in UK. Stocks are a little down. Stocks are a little up in France. All right. Okay, so not a lot of economic news today, but we have economic news coming tomorrow and I believe Thursday. So those 2 days, I'm looking for economic news to really move the market. So not much economic news there. Let's take a quick look at Ali Financial, and then we're going to get into Apple. And I'll go through I already have Apple in my intrinsic value calculator, but what we'll do is take a closer look and just kind of go through all the steps on Apple. Ali has been a stock that I've been an investor in the past. I'm not an investor in it now. It worked for a while. You could see that it was working for this period of time. I loaded up on it, it went up, and then at a point in time, I think as we ran into, or we were going into the month of July, I was really wanting a higher cash position, and I got there by selling a few stocks, and I sold my complete position of Ali. And today, these guys are really suffering. It's down 10%. And did they have earnings? No, earnings are on October 16th. So something happened that investors do not like. So bad day for Ali. They started in car financing, and it's a good company, and they're trying to diversify into other things. They are an online bank, Ali Financial. They can provide banking for people. They have a decent dividend, and it was a good stock for me. I made money, and they paid me a dividend. Thank you very much. It's small cap. So I've got good things to say about the company. These guys are somewhat like a bank because their primary business is lending money. So that's what they do. And I thought their performance was pretty good. In the years when the car business was quite good, they were making really good net interest, and they were growing their business. They hit a wall because the car business hit a wall. If you recall, used car prices really began to go down, and Ali makes a lot of money on a used car loan to somebody who has okay credit. And that okay credit is, you don't get the best rate. It's a used car, so now you're getting a higher rate. So overall, Ali's really lending out at high interest rates. And it was interesting to see in the information they provide that the average interest rate that they're charging is quite high. And now we have declining interest rates where Ali's probably going to be able to borrow at a lower rate. Meanwhile, they've got all these car loans where people are on a car loan for 3, 4, 5 years, and Ali gets to collect a very high interest rate. So I actually thought that, the decline in interest rates is really going to help Ali, but something else is going on out there. I like tracking stocks and then waiting for something to happen to drive down the price, give me a really good discount, and then you get a really good quality company at a discount. Now I'm pretty good with financial services. I've got a good number of them. Let's see here. So I've got a lot of financial services right now, and even got Citibank in there. So that's one of the reasons why I sold Ali is, okay, I've got the financials covered, and I could take one out, and I could probably take out the one that I felt had the least ability to appreciate, and that was Ali. So I'm not really in a hurry to get back into Ali. But I thought it was interesting. I don't know what the news is. I wonder, it's not being reported here. What happened? Are they being sued or don't see it? Well, maybe on Google Finance we could see it. Nothing. I don't think it's because they hired Hope Melman and then the stock went down 10%. I don't think it's the hiring of this professional. I think it has nothing to do with her hiring. All right, so that's Ali Financial. Let me catch up on some comments. It's good to see Mr. N. Kiter. Good morning. Driving and listening. All right. Good that you joined. Appreciate it. And then Mike, same for me. Owned Alley and sold it for a gain. Nice work. Nice work. Good morning. And then Mohammed Maki, good morning. I just want to say, always watching your videos from start to end, no matter how video long, keep watching. All right, cool, man. Thanks for the comment. I'll try to make videos as long as they need to be. Sometimes, a topic might take 20 minutes, but I try to aim for under 10. But sometimes I feel like, man, I didn't cover enough. There's probably like 3 or 4 other things I could have said about a stock. And as I make videos and really do a live stream, I really intend on providing investors, kind of like-minded investors, to the way that I invest, which is long-term, mindset. Hey, I want to buy a stock that makes money over time. Every 5 years, it doubles in value. It just has that nature in it. And I'm an active investor. I don't buy a stock and forget it. No, I buy a stock and analyze it, twice a quarter, if not more often. And I just make sure that the company is operated well. And I appreciate you saying that. I'll keep up doing the videos. I think over time, I'm getting a little better just by being able to communicate better with investors. And I'm getting better with the feedback that people give me. I mean, some of the feedback really helps me focus on what people think is interesting. And some of the feedback, FYI, is pretty insightful. Like, we're going to look at GCT. It's not a symbol I would have looked at, but on the live streams, people bring up stock symbols that are really interesting. Sometimes it's a stock that I haven't looked at in a long time. I've never looked at before. And like, for example, we've been looking at shipping companies, ocean freight companies. And I think we looked at 6 in the last 4 or 5 live streams. So people have that on their minds. I'm like, hey, man, I'm glad I'm in Zim, which is a, ocean freight company. But I think it gives me a few new investing ideas as we go through this. So everybody wins. I get new investing ideas. Hopefully you guys get good information and investing ideas. And we all try to make a little more money and make our portfolios that much better. All right. So we went over Alley. Now let's talk about Apple. So Apple is the most valuable company on the stock market. And Alley's most famous investor is Warren Buffett. And I think Apple is an impressive company. I think it's, I don't need to give it more compliments. Plenty of people do that already. And the stock's really done well for investors. Okay. Now, when I look at a company and try to assess how strong are they? How desirable are they? Are they in a position where they have no competition? Are they just, it's very unfair. They're so good that nobody else can even rival them. And I think Apple has been in the green to some extent, but they're moving between the gray and the green. And here's why: is their iPhone is really the primary reason why they have so many revenues. Now, the iPhone has a lot of new competition. And something that was interesting was that as we look at Apple and we hear of their updates, the stock didn't really move. At the same time, some of the competitors, and it's not listed here, but Huawei came out with a phone that folds in 2 places. That's interesting. I think the whole foldable phone might be a new trend in smartphones. I'm interested in it. I've seen the, I think it's Samsung that was coming out with a foldable. It's pretty awesome because you take what is essentially an iPhone, but it's double because you unfold it and now you have double the screen space. So when I'm kicking back on the couch watching Netflix with my wife, you open that puppy up, I've got that much more screen space. Or you're on an airline flight, you name it, right? So I'm actually, as I refresh my phone, I'm looking to go away from iPhone because it's exciting to see Samsung do what they're doing. It's also exciting to see the Google Pixel. They're saying they're integrating their whole AI, their Gemini app. So that's interesting. Apple, it's like, I don't see anything new. And that's where the beginning of my expectation that they're going to struggle. And it's one thing if a stock is priced really low and it's priced where if they just operate their business somewhat effectively, the stock's going to be all right. The stock price is going to be okay. But when you're priced at $3.3 trillion, that's a lot of value. Warren Buffett exited the position. He sold 50% of his position. Of course, they hired professional, PR people to say, oh, but it's because, he's balancing out his portfolio. Yeah, he took all that money and put it into cash. So Warren Buffett thinks that being in cash is better than being in Apple. You can tell me whatever you want. But I happen to think it's still a negative, sentimental or negative fact that, hey, he sold half of his Apple stock, which was a lot. At what point would they sell more? I don't know, but I don't think that matters to me. I'm really basing it on, is the company still as strong as it used to be? Is it still as exciting? A company like Apple, they stay exciting if they're innovative, if they are coming out with the best ideas, if they're coming out with the best product. And I don't know that Apple is hitting those benchmarks. They're late to the AI game. Like AI has been out for like really hot and heavy for like a year and a half, 2 years. Really hot and heavy. So companies like Microsoft and Google, Meta, they're all over it. And obviously NVIDIA is all over it because they're providing the GPUs. Apple was late to it. They had to cancel their Apple Car, which was a dumb idea. It was dumb from word go. Who would want to create a car? You got not a thousand, but hundreds of, and I'm not exaggerating. If you add them all up, we could probably have 100 competitors in the car business. And yeah, your car is going to be cool and it's going to be a little nicer, but consumers have so many choices. And some car companies have been around for 100 years. I mean, these guys know how to make cars. And so that's the beginnings of why I think Apple is going to struggle. Now, how do I make money on that expectation, right? Now, I can go through their fundamentals and say, man, they're not growing. That's a fact. Everybody knows that. But for some reason, I think the news outlets and everybody, they're just very kind to Apple. Maybe it's part respect to Warren Buffett. I respect Warren Buffett. I think he's awesome. But it's kind of one of those situations where I'm thinking, why aren't they harsher on Apple? I know Google gets hit a little bit with like antitrust stuff. I'm not too worried about that, but that's an example where they're getting hit. And other aspects of Apple, I think they get a pass on a lot of aspects, but I don't, it doesn't matter what the news is. The fundamentals are that they're not growing. If they don't start growing, I think there'll be more skeptics, voicing their opinion on Apple. I'm not the only one. I think I've heard others say Apple's not growing. What's the deal? They don't really have an exciting product strategy. Their product strategy is quite dull, lacking in innovation, lacking in creativity. So that's the beginnings of my bearish position on Apple. So let's take a look at the intrinsic value calculator. They're at 220.91 is the stock price. It's early, so I'm going to start making notes for myself. All right. So as I look at Apple, I value companies based on free cash flow and earnings per share, but free cash flow is the king. Free cash flow will tell you if a company is going to be really valuable or if it's just going to be interesting. Earnings per share I use because especially young companies may have terrific earnings per share, but they just haven't gotten to the scale they need to be at to be a really high free cash flow generating company. For example, Uber just started generating free cash flows, but they got there and now they're growing them very fast. And there's many companies. So I like looking at both just to see the two sides, but I really do use more the free cash flow method as a major portion of my blended overall value of a stock. And I use that as a greater basis of my blended value and decision making. So when I update the stock price, the stock has, they have terrific cash flows. And for the first 4 years, I'm growing those cash flows by 7%, which is very generous. They're not growing, but it's still generous. It's like, okay, they're probably going to figure out how to make more cash. And then long term, again, very generous, 4%. If they start declining their revenue, these numbers turn negative. If these numbers turn negative, I think they're going to have problems. In fact, I'm going to move this guy to 5, and I'm going to move this to 3.5. So here's the cash flows. They have a terrific balance sheet, 7.5 discount rate. And I'm looking at Alphabet. What am I doing here? I'm not quite sure. It's early, guys. Sorry about that. And let me undo some of these changes. I'm updating Google accidentally. And all right, back to Apple, back to your normal programming. I had it at 4, which makes sense. And I'm actually going to move that to 3. And then this one to 3.5. Okay, so this one is 220.91. So we're at a 26% premium. And Apple, the way that I treat Apple is I give them a very favorable forecast. I'm not forecasting any negativity, although that could happen. If the story begins to take shape that, hey, Apple is actually going to have a loss of revenue, if you compare one quarter versus the same quarter in the next year, it's going to be interesting to see how this stock is then valued. The free cash flows are phenomenal. That's what creates a really high intrinsic value for Apple. And when I value based on free cash flows, I get to a very good value. It's just not as high as they're currently priced at. It's just a very high stock price. So, I think that they're really set to disappoint at some point. I think they're already disappointing people that observe, their business, which is, hey, where's your innovation? If you guys can't keep up with the market, it's just going to keep getting worse because Huawei, Samsung, Google, they're coming out with really good products and they're not taking a break. They're really going after this business and trying to take over. So that's the beginning of my bearish sentiment. So what I've done is I've started to short Apple, and my short position on Apple is, let me go to that. It's going to be a long-term short position. I've put $7,000 of capital at risk. Right now, I am losing $78 on my short position. A short position means that you borrow those shares from your brokerage, you sell them, and you hope or you expect the stock price is going to go down. And once it goes down, then you rebuy the shares and give them back to the owner that lent them to you. The differential being your profit. Right now, if I bought back the shares, I would have to buy them at $78 higher than I borrowed them at. Now, what often comes up is, hey, shorts are really risky, and shorts are purchased through margin, which is a fact, and you have to pay interest. So I'm going to cover the interest part quickly and then go into risk and how I manage risk. So my brokerage doesn't charge me interest because I have the cash to basically borrow from myself. So I short the shares. You have to buy them on margin. But what the broker does is they take cash from my cash balance and they move it into the position. And then I'm basically borrowing for myself. I'm not earning interest on that money. So I guess the loss of income from my money market account is the cost of being in the Apple short position. But I'm not paying somebody else, let's say 8% interest or something like that. I do have to pay the dividend. So every time Apple pays a dividend, I'll be paying the rightful owner of that stock the dividend. So that is true. So the whole buying on margin, check with your broker. That's my situation. I imagine brokers are going to be different, but that was something that I wanted to share with you. Risk. So as I look at a stock and I'm like, okay, now theoretically, right? Theoretically, having a stock short, the losses are infinite. If the Apple stock were to go up to, $5,000 a share, I'd really lose my shirt. I'd be like, man, that's horrible. But let's think about that. Let's rationalize that. It's a $3.36 trillion company. If they were to double in value, they'd be a $6.72 trillion value company. That causes my head to explode. Like how, first, it's amazing they're at 3.36 trillion. It's like, wow, that's amazing. And they're doing it on a PE of 33.6. A non-growing company with a PE of 33.6. Okay, Meta's growing. They don't have a PE of 33. Meta's growing better, and they have a valuation that's not as I think beneficial to the stock as Apple. So I think about risk of, is this stock going to double in value and then I'm going to lose money? Man, 3.36 trillion is a huge, massive valuation. So for it to potentially double, the likelihood is near zero. I don't know that people are going to argue with me. Can it go up 25%? Absolutely. It certainly has. If we look at the Apple stock over the last year, it's had a really nice rally, right? From here to here, 32%. But that's where the opportunity begins for me. It's like this rally, I have no idea why investors are buying it. Maybe they lack other ideas for investing and they're very comfortable with Apple. Hey, I'm going to buy Apple. It's safe. Everybody knows Apple. I get that. The thing about stocks that are really easy for investors to recognize, retail investors, or these big, money managers, is that think of a huge money manager that's managing money for a client. Hey, I've got you in a couple of stocks, and one of them is Apple. That, wealthy person is probably comfortable with that position because they understand Apple. They can get their heads around that. They can understand it. So it's kind of a favorite to put into portfolios. And the performance, has really helped more money managers put it into their portfolios. But at some point, stocks will always return to their intrinsic value. And sometimes as they return, they go below intrinsic value because the downward trend momentum will take them past that level. And I think that's going to be the case for Apple. So back to risk. So I don't see a very high likelihood of, the stock doubling or going up much more from here. It can, most definitely can. Investing is about making a decision, trying to get as much useful information, and then making that decision and then following it through, trying to learn something along the way, getting better in every investment. So I've got $7,000 out there. I could see myself, and I think this thing's going to take a while. Might take a year, might take 2 years. And I could see myself putting $25,000 at risk against Apple. As we do analysis, right, and you look at a company, and let me show an example. Apple might not be the perfect example, but I'm going to show some shorts that did work for me. I shorted CrowdStrike. This one, it worked really quickly. So I looked at CrowdStrike and I'm like, okay, I understand their business. It's a software company. They do security. They were just a darling. They were kind of like the automatic, all these fund managers are like, oh yeah, CrowdStrike, it's the best and it's growing and yada yada. And it's like, okay, at a certain point, I get that they're good. Not arguing that. I just think they're really expensive. If you look at their intrinsic value, they were well above where they should be valued. So I shorted the stock because you can make money if you find the company early and you look at their fundamentals and the stock goes up, right? But if you think it's way too high, if I think it's way too high, you can also make money on it the way down by shorting the stock. Now, I was fortunate to start shorting the stock here. And then all of a sudden, it caused the biggest outage in the history of computing, and the stock's way down. So I ended up exiting the stock. I made 42% return in like 10 days. So that's not going to happen every time. And I'm sure these shorts are going to cost me money on occasion. But on this one here, it really did work. My point being is, as a long-term investor and a person that like looks at a stock, drills into it, goes through financials, understands the business, understands its position in the marketplace, understands, where are they at with their competitive ability. And you put that all together and you realize this stock's really expensive. I don't get it. Why are people paying, 40, 50% more for the stock than what it's worth? At the end of the day, companies are cash generating entities. That's what they are. And the purest like investment, right, is if you invest in bonds, you totally understand this, which is if somebody promises to give you $1,000 a year for 10 years, that has a net present value. And you can calculate your rate of return. You can calculate a lot of things because it's very easy to understand that. It's going to deliver $1,000 a year for the next 10 years. Stocks are much harder to put into that model, but I strive to understand the company well enough to put them in a model like that, because that's how Warren Buffett, a lot of these really good investors, Pat Dorsey, that's what they do. They try to really understand a stock and put it into a model. I try to make it as simple as I can. And my model is I base it on free cash flows. I look at the desirability of a company and then put it into my process. So shorting stocks like Apple, you can make money on a stock when you find it early and then it rises, and you can make money on stocks when they're too high and they drop. We're in an expensive market, so it's easier to find right now stocks that I think are too expensive versus really good deals. It's getting better. Last week was a move toward smart, lower stock prices and better valuations. I agree, but that's just 1 week. If you look at where we've been, with the market over the past year, we're still up 21% on the NASDAQ. So stock prices have been running for a while. If you look at the last 2 years, the NASDAQ is up nicely 62%. So stock prices are high, and it's sometimes a little easier to find stocks that are really priced too high. And I'm trying to figure out, how could I make money? How can I make money over the next 12 to 24 months? And holding stocks long term is always going to be a basis of my investing philosophy. But I think that's an opportunity. If I could pick out a couple good short positions and make money at it, it's just going to give me a better return overall. All right, so on Apple, I'm shorting the stock. I'm going to do a video on it just to update my short position on Apple, and I'll release it on the channel, and you guys can take a look at it. I see some comments out there already on Apple, so let me catch up here. All right, so let me open up one more browser on a screen you guys can't see, but let me open that guy up. I know I'm on Stonks, and I want to make sure that if somebody on Stonks is making a comment, asking a question, I want to be able to. Here we go. Sorry, I wasn't on the Stonks chat, so it looks like Brinarby is on. Thanks for joining, and appreciate it. So now I can monitor both chats. Back to the chat on YouTube. So Muhammad, Mike. So Mike, yep, I own 3 different shipping companies. They're all different types. Yeah, the shipping companies, what's interesting is like they're underappreciated, right? Like investors don't give them high valuations, and they pay really good dividends. So if you buy them at the right time, they can really give you a good return, and the dividend is nice. I mean, the dividends are pretty solid that they pay. And then Mohammed, Apple is not the company that grew fast, but it's still gaining the trust of customers because of Apple products. Yeah, I agree. The Apple product is a good product. They control the entire technology stack from the operating system to designing the device. They're very secure. I agree to all those. It is a good company. So Adobe and Kroger announced. So when are those? See, earnings calendar. So I thought Kroger was going to announce today after the close, but doesn't look like they're announcing today. Maybe they announce tomorrow. Yeah, I'm a Kroger stockholder, so I could have sworn. Yeah, so November 6th. Oh, wrong one. So the 12th. Okay, I was wrong. So on the 12th, Kroger will announce, and they will announce, I guess the 12th is Thursday. I'm a Kroger stockholder. I'm satisfied with the investment. It's my only consumer staple, and the stocks performed. I've been an investor for a while. I've got a good return going. They pay a decent dividend. I think strategically they're the best pure play grocer in the United States. Other companies, they do have to compete against Walmart and Target and now Amazon. But I think Kroger is a pure play. I think they do things the way they ought to be doing as a grocer, and they will continue to grow because they're quickly becoming the last man standing, and we're going to need groceries. Nobody's going to stop eating, right? So you need groceries. All right. So Kroger's announcing. What other company do you have out there? So Adobe. So one's Adobe. I'm also an Adobe stockholder. And Adobe's a stock that on September 12th. So I guess it's going to be a big Thursday for me. Adobe's a stock that, the market. So look, this is Adobe, right? And Adobe, from a software perspective, for all like creative, software for making videos, for all kinds of creative marketing, and they're number one. I don't think anybody's going to argue that. They're really big, and they've really grown nicely. And the market, even though their revenues have consistently been going up, sometimes they're not growing as fast as the market would like, but still, the market has at times said, you know what, we're just going to discount Adobe tremendously. We're going to discount it by 60%. And then more recently, the market said, you know what, we're just going to discount Adobe by 30%. And on these occasions, I'm like, well, thank you very much. I think Adobe's a great company, so I'm going to buy. And I made money, went up, sold. And then the stock market discounted it. And I said, well, thank you very much. You guys, the stock market, you're so kind, or I should say you're so irrational, because this is the same company. When you look at Adobe and you look at their revenue, they're growing. They're getting bigger, stronger. Their products are appreciated by their customers. Their customers think, man, Adobe software is so good, I'm okay with the price going up. And more customers are saying, Adobe software is so good, I'm going to become a customer. So they keep growing, good performance, very good cash flow, excellent balance sheet. And the stock market does this. So I try to take advantage of that. I'm not like a psychiatrist or psychologist, but the market has kind of a unstable emotional aspect to it. You see a stock like this, which is Adobe's a quality company. It's been a quality company for a long time. Their strategy is really good. They have an AI strategy. All pieces to Adobe look good to me. And that's what the stock does. So I try to take advantage of it. Take advantage of when the market thinks this high quality company is not deemed to be good enough or good, buy it, because I know better. Or I shouldn't say it that way. I should say, I believe in Adobe and I believe in their fundamentals and I believe in their innovation and their software. So Adobe has been a fantastic opportunity, and they're going to announce on Thursday. We'll see how that announcement goes. But I expect they're going to keep growing at their 10%, which is very good because they're a very large company now. They're a $20 billion company. So when you grow 10%, that's $2 billion. That's like they're growing by a good size each year, making that much more cash. I mean, Apple's not growing. These guys are. And the market treats Adobe stock like this. So that's an opportunity for me, and I'm going to keep at it with Adobe. So Mr. N. Kiter, shorting Apple is risky, even with rational arguments. Apple gush money even without innovation. They are doing huge buybacks. Yeah, let's talk about buybacks. So buybacks is a technique of reducing your share count, and it makes investors realize that, hey, there's fewer shares, so there's greater value. And those will work until they stop working, which means at the end of the day, when we look at the top companies on the index, okay, all these companies got to where they're at by being the best at their product or service or combination of the two in the marketplace. That's what got them there. Share buybacks didn't. Okay. Let's talk about Microsoft. The best software company. Early on, they had the best software for the PC. They grew because they had the software that consumers, business people wanted to use. They wanted to use the applications that Microsoft produced. So based on their product, they became a $3 trillion value company. NVIDIA created the best GPUs in the history of computing. That's what got them to 2.6 trillion. Amazon is the largest e-commerce company in history. They created this massive category, again, based on the service, on the platform they provide. Google search. So I can keep going on and on. Innovations in product and having the best solutions and products to the marketplace and being the most competitive. That's where value comes from. It doesn't come from buybacks. Buybacks are a technique of enhancing your stock price. Got it. But if we're going to depend on buybacks for Apple's valuation, I feel really good about my short position, because that's a temporary stabilization of the stock price. And as the Google Pixel smartphone starts growing market share, and by the way, the iPhone is not the market share leader. Samsung is the market share leader. They sell more units than Apple. A lot of people are surprised by that. As Apple becomes more, Samsung becomes more successful, that should be a wake-up call for Apple stockholders as well. And of course, Huawei, because we don't buy Huawei in the US, it's banned. But around the world, people buy Huawei. And it's a less expensive, very capable, high technology device. So yeah, so I got buybacks, and they will work until they don't work. Shadow Guy, good morning, sir. Very good to see you. I'm multicasting, casting now. Yep. Yeah, I'm growing in my streaming journey here, and it's good to, streaming is awesome because I get to hear from you guys. I can do a video, and I do it kind of in solitude, like do all my analysis, and then through comments on that video, we interact on it. But this is kind of like the best of both worlds. We can get deep into analysis and thought. And even better is on Sundays, the community has a conference call, so we can talk through things. I know Shadow Guy is a regular, and I think he came up with kind of like the idea, so we went for it. Mr. N. Kiter, I think, has attended quite regularly. And be great to have anybody else. Just get your email address to me so I can invite you, and you can be a part of that community conference call. All right, so moving along, we went over Ali, we went over Apple, GCT, and let me look at the markets real quick. The markets have been open for 20 minutes, and the Dow is down a little bit. Dow is made up of 30 companies that are very well known. S&P is up a little bit. NASDAQ's still in the green. Russell is pretty much flat. And the VIX is down. So, all right. So the market's trying to figure out what it's going to do. Might be kind of a flat day. Again, I'm expecting the news tomorrow and on Thursday to be really interesting. If the news comes in as expected, the market may still be a little flat. But if the news comes in very favorable, the market could rally, or opposite to that, if the information is concerning, the market can sell off. We're in a period of time when I believe that there's a lot of there's fear in the market, and the fear is some of these investors are sitting on really good returns, and they're like, should I offload? You name the stock. I'm sitting on 100% gain, 50% gain, and that last week was a pretty good haircut that some of these stocks took, and I'd hate to see my really nice gain go bad. And now the month of September and October historically have been bad months for the stock market. So I think we're in a period of the market when I think we're going to sell off really fast. Sell-offs will be fast and quite, I'm going to say, big losses, and gains are going to be gained, a little at a time. I think that yesterday was a relief rally because last week was so bad. But I could see us move down, the market move down another 5 to 10%, maybe 15. And over the next 8 weeks or so, the market corrects and the stock prices continue to come down. That's how I feel about it, because I think it just takes one bit of bad news and it gets the ball rolling downhill and stock prices go down. But for a while, you guys have been watching my videos. When we were in this period, I'm like, man, I'm uncomfortable because stock prices keep going up. And yeah, I get that it's fun to see the portfolio go up in value, but it's not sustainable. At some point, these are going to sell off. And if your stock prices are too high and way above intrinsic value, it's going to be quite painful in some areas. And it's certainly playing out. It played out like that last week. And that last week is a sample of what could happen again over the next 8 weeks. Maybe not as bad, but close to it, or maybe even worse. I don't know if some bad news comes out. So let's see how things play out. Mr. 123 Cheetah, what are you buying? Are you buying any oil these days? So let me tell you about oil. So I'm a Chevron stockholder. So I'm not buying any more Chevron. I got $107,000 in value, but it hasn't done anything over the last couple of years. And it pays a nice dividend. I received a $1,250 dividend this morning. It's nice. You wake up and boom, here's some money. Okay, great. It feels like Chevron was working while I was sleeping, and I'm okay with that. So I've been buying into a little energy services company by the name of Pump. And Pump provides a lot of the services to do fracturing, but I think the street name is fracking. And I've been buying into it. I just got started with that and will continue to buy shares. I bought some more shares. I think I bought shares yesterday, or for sure I bought some last week, but I'm a small company like that. I'm careful. I don't jump in head first. So that's what I'm doing in energy. Holding my Chevron. I actually sold a call on Chevron to make a little income. And I don't think it's going to get to $150 a share on September 20th. So I'm going to make that premium without having to exercise without my shares being called. I'm probably going to sell another call position on Chevron. The stock went up quite a bit yesterday. It's probably settling down today. And we'll probably sell another call contract to make a little extra money. And I wasn't touching options for a while. And then the community influenced me. I think I can thank Shadow Guy for getting me back into the options game. I started to really see how options can enhance my returns, and I'm in maybe 8 different contracts right now, one of them being Chevron. So I'll probably sell another call option contract on Chevron, because it wouldn't be the end of the world if my shares were called, especially if I make the contract at $150 a share. I mean, I'm okay with it going up like 3, 4, 5%, and then my shares get called. If it doesn't, then I get the premium. So I might be doing that within oil, within energy. So oil it's going through a tough period. Oil prices, and it doesn't show it quite well here. I'm going to go to CNBC. I like and dislike CNBC. I like the information they provide, but I hate all the advertising. It's like, geez, man. And their website's also slow. So when we look at the chart for oil prices are really low. I think this is the lowest point we've seen in a year. It was much higher in April. It was at 85. And basically the oil price is going to dictate, how much cash flow these oil companies produce. So is it going to be at $68, for a long time? I don't think so. You could see that, stock price or oil prices come down. Looks like they came down last year as we headed into the end of the year, and then they rose again. So I expect there will be some kind of rise. But the reality is that oil companies are not going to have a very prosperous Q3 because they're going to say, hey, we didn't make as much revenue because we were selling oil at $68 a barrel. And our revenues are going to be compared to last year when we were selling barrels of oil for $90 a barrel. So I think they're going to say, hey, our revenue came down. And I think stockholders will be like, you know, they're going to give Chevron and Exxon a haircut. So now it might be a good idea to buy into energy, buy when stocks are low and watch them rise when oil prices rise. That could be a good move. For me, I'm standing still because I've got enough energy. I don't want to be too exposed to energy. Chevron's a good stock. I'm good with it. And I like the dividends. So good luck with that. Yeah, Shadow Guy, really, really appreciate you bringing up your ideas. I appreciate you putting your strategy out there, which I studied and was able to learn a few things. So thank you for that. All right, cool. So we covered, okay, we want to cover GCT and maybe we can land the plane. So GigaCloud. So GigaCloud technology provides end-to-end e-commerce solutions for large parcel merchandise. So this is like I think if you buy a refrigerator or something, we're buying everything online. It's like, it doesn't matter that, you're like furniture. My lovely wife, we did this project in the backyard and we built this gazebo. I'm the laborer. She's the thinker. She's the designer. I'm the worker. And we did this gazebo and got a nice bench. And it turned out really nice. And she got everything online. And these boxes are quite big. And we've had office chairs delivered. I mean, we get all kinds of stuff delivered now. So it's just really convenient to go online and find something you need. You don't have to go to a showroom. My experience in showrooms is not the best. It seems like I go to these, furniture stores and I'm in, like I was looking for a new bed for my younger son. This is a couple of years ago. And at Costco, I can get a mattress for like $200, maybe $300, good quality mattress. And they're trying to upsell me to like a $2,000 mattress. And I'm like, hey guys, like I just need a mattress for this young man. And he doesn't care if it's name brand. He just needs it to be comfortable. So the end of it is I went back to Costco and got that done. But the experience at furniture stores is not the best. So staying online is probably a good idea for me and my wife. So these guys focus on big stuff and then they deliver it. So very good model. I think they probably have a very good relationship with e-commerce providers. And this, I think, is what I like about GigaCloud is that they're in a space that's expanding, right? Are people going to continue to buy online or will they stop at some point? For example, we were talking about, I think it was Dine, which was a company that owns Applebee's and so forth. And we were talking about that on a live stream yesterday. And I made the comment that, hey, they're in a space that's contracting because DoorDash and Uber Eats is expanding and they're cannibalizing, they're disrupting the in-restaurant dining experience. Now, these guys are in an expanding space. Hey, more and more consumers are buying online and they're buying bigger and bigger things. This desk, you can't see it. This desk I bought online. It was delivered. It's really heavy. And guess what? It got delivered and it was super convenient. And when you go online, I didn't have the choice of like a couple of desks to pick from. I had hundreds of desks to pick from. I picked the right one. It's a stand-up desk. Yeah, it's a little, switch where I can lower it. I can sit down. I can stand up. Perfect. So this category is a growing category. Now they don't have like IP that makes them super like powerful in their industry. They're a solid in the gray company that has a little bit in the green. The little bit in the green is that they have the know-how, they have the confidence of the e-commerce retailers, and I think they can really grow quickly. And I'll have to keep looking at the company. Right now it's on my watch list, and let's analyze the company further and look at the fundamentals. But this is the kind of company I think of when I think of this company. It always starts with, do I believe in the company? Do I think their industry is expanding, contracting? All those things have to be taken into account before we look at evaluation. So here's GigaCloud. And what I'll do is I'm going to open up a browser. We'll go through a tour of the fundamentals, but then I'm going to open up a different browser. And then I'll do my intrinsic value on GCT. Okay, so these guys are a small cap, tiny cap company, 750 million. Whew. And then we got this is less than one Apple share buyback. And then we've got revenue of almost $1 billion. Impressive. PE ratio, 6.5. Hey, now we're talking. I don't know that they're classified correctly. I don't think they're a technology company. I would put these right beside like UPS, FedEx. I think of them as an industrial, as a freight company. That's where I would put them. When we look at their financials, look at this growth. Very nice. Let's look at the quarterly. Make sure that they're not missing something. Nope. That looks pretty green to me. Okay. High growth, free cash flow. The cash flow. Hey. So high growth company, the cash flows. Are they profitable? Let's take a look at their forecast. 3 analysts are already covering this tiny company. So the analysts think the discount is 181%. Beautiful. Earnings per share is expected to be $2.93. Man, these fundamentals are looking good. So let's fill in the intrinsic value for GCT. And I don't know that I have a company like them. I'm going to use a shipping company, Zim, because Zim does ocean freight. These guys are kind of a logistics company, and Zim is an industrial stock. Back to my earlier comment that I don't quite agree with the industry and sector that has been So it looks like my software is freezing up. I started using the Excel version that I could use online, and it's freezing up on me. So I might have to punt on this valuation. Take a look. Yeah, so let me check in on comments and see if there's any new comments. Yeah, I'll have to work on my software rather than keep you guys online. What I'll do is I'm going to look at GCT and create a video. I'm going to create a video on Apple, kind of sharing further, my whole, analysis of Apple, what I'm doing with the short position. And I'm going to do GCT because I think as we look at these small companies, look at the Russell, it's not keeping up with the NASDAQ. And Russell's made up of small companies. So when the Russell, you see how it's gone, kind of flat for 3 years, right? So there's a lot of quality companies here that are not being priced up to their value. And I want to go find them. And GCT may be one of those companies. So I'll do a video on it and I'll share that with the community. So, all right, guys. So we're still in the green on the NASDAQ, the S&P, the Dow's down a little bit, but hopefully we end the day in the green. We'll see. But that is the live stream for today as we open the market. It is a little after 7 a.m. Pacific, 10 a.m. Eastern. Market's been open for 38 minutes. Let's see how things play out. Everybody, good luck with your investments. And thanks for tuning in. Really appreciate it. And I'll be back tomorrow at 6 Pacific, 9 Eastern to do another live stream. Everybody, take care. Thanks for tuning in.